Hey, it's Darren Mitchell. I am super excited to be presenting at the Real Estate Investor Summit in Calgary, February 15th to 18th. Amazing line of speakers. We've got Michelle Romano from Dragon's Den. We've got Investor Mel and Dave. We got Ken Dunn, ultimate fundraiser guy. Simon, the condo king. We're going to show you how to get started on your real estate journey or experienced people. We're going to show you vetted deals, and we're going to show you how to invest passively. Buy your tickets for the Real Estate Investor Summit now. Hi, everyone. Welcome to Control and Compound. I am Darren Mitchell, and joining me as always, Christina Wyatt. Christina, how you doing today?
Hey, Darren, I am doing excellent. How are you doing today?
I'm doing great. Can't believe it's February already.
Yeah, where did that first month of 2024 go? I feel like we blinked and it was gone, but here we are, another exciting month at Control and Compound. So happy to get back into regular programming and back to our updates. Get back into the swing of things.
Yes, it's been a busy time at Control and Compound. We're growing, we're having fun, so life's good. But let's dig right into this, Christina. Let's start
Wait,
with.
1 second.
Oh,
I gotta remind everybody, and I want to thank everybody for following us, but also remind them that if you're listening on your favorite podcast platform, make sure that you like and subscribe. If you're listening or watching on YouTube, make sure you like, subscribe, and hit that bell button so you always know when new content's coming out. And don't forget to follow us on our social media accounts at Control and Compound on Instagram and TikTok.
all right, 100 and some episodes, and I keep forgetting that, but I'm sure by the time we get to 1,000, I'll remember that, Christina. So thank you. All right, so let's dig into Bank of Canada. Interest rates are always top of mind for a lot of Canadians, last couple of years anyway. So what's going on with the Bank of Canada and interest rates?
Yeah, so we had an announcement back on January 24th, and they did hold steady. So we're still at 5%. That's actually the fourth consecutive time now that they've held rates. Now, a lot of people were hoping that there was going to be an interest rate deduction. We didn't see that, although they are saying that some of the language that they used is kind of leading up to maybe seeing some interest rate deductions in 2024. Not today, but down the road we might end up seeing those. I think they're thinking, like, a lot of people are thinking like April or so now. We do have another update on March 6th. Now all around this comes with inflation, right? So where have inflation rates been? Where's the decision being made? So at the end of the year, inflation rates were about 3.4%. They're looking for a 2%. Now, this is really driven by shelter costs, housing, and stuff like that. We know that. But they do expect that it's going to hover around 3% for the first half of 2024. And then we're going to gradually see it hit that target of 2% by 2025. And I do think that will come with, decreasing those interest rates as well, because with it being shelter, the driving factor, you're going to bring down some of those mortgage costs for people, right? So inflation kind of holding steady, going down a bit, waiting for that next announcement. Now, our neighbors in the US, they had an announcement at the end of January as well. And on January 31st, they decided to hold their rate too. So the US is also holding. Now, over there, they really thought that they were going to see a decrease this month. Like, they thought for sure that that's what was going to happen. I think Wall Street was kind of planning for it too. And we'll talk about that in just a minute. But they didn't see that happen. And again, their language is the same kind of thing. Like, we're seeing things get better, inflation's going down, but we're just not quite ready to pull the trigger and start decreasing those interest rates as of yet. So yeah, just waiting it out for the next one and holding tight at that 5% in Canada.
Yeah, you're bang on the U.S. announcement. Everyone was anticipating, or a lot of people were anticipating a rate drop by March in the States, and Feds basically came out and like, yeah, don't expect to drop anytime soon, and the market plunged like 1.6% in a day. But as you know, here we are only a month into 2024, and already we're seeing kind of the same trend we saw for the past year on the stock markets. We've got the U.S. market up about 3.44% year to date, and the Canadian, which is about up 17% over a 1 year period. So U.S. 3.44 year to date, up 17% over a 1 year period, and the TSX, the Canadian market, up 0.65 year to date, and down 0.26 over a 1 year period. So we're really seeing that gap between U.S. and Canadian returns continue. Then we get the Canadian dollar still hovering, around that 74 cents. hasn't really changed too much. So the Canadian dollar's pretty flat. But if we go on to Bitcoin, well, Bitcoin's been an exciting time for Bitcoin. All kinds of stuff going on with Bitcoin. Bitcoin right now, time of recording this, is around 42, 43,000. But we saw Bitcoin spike up to 47,000, and that really spiked up with the news in the States that the SEC, as we anticipated last year, they approved the Bitcoin spot ETF, which was huge news in the States. And we got a whole episode coming out on this, but it's just basically going to make it easier for institutions to get into Bitcoin and easier for individuals to have exposure to Bitcoin without physically holding the coin. So it spiked up to 47. There's some profit taking down around 42, 43. So if we just look at the impact of that, though, so BlackRock and Fidelity, two of these companies that have this spot ETF, Bitcoin or Bitcoin ETF, just those two funds alone have attracted over $5 billion in the first 3 weeks. So that's $5 billion went into these spot ETFs for Bitcoin that are backed by Bitcoin. So that's huge news. And now we see the next kind of step. That's going to make it easier for institutional, more acceptance in the institutional. And now we see Hong Kong has basically followed the SEC and said, their exchange over there has said, we'll accept applications for a Bitcoin ETF in Hong Kong. So again, that could open up the Asian market to make it easier for people in Asia to be exposed to Bitcoin. So again, I think as these things keep happening around the world and Bitcoin becomes more mainstream, more accepted by institutions, we could see Bitcoin, continue to go up. But we're not Bitcoin experts. We're just telling you what we think. But that's Bitcoin, Christina. So we got a lot of exciting news there in Bitcoin. What are we on to next? Real estate?
Yeah, so the real estate market and what that's looking like. Now, I know that we're in February, but I do want to take a bit of a step back, and stats for the end of the year came out obviously in January, and just wanted to recap those. So on the real estate side, it actually remained relatively steady in Canada, even though we've had pretty turbulent 2023. The national average price of a home in Canada as of December 2023 was around 657,000. So that means that the average Canadian home price experienced a 5% annual growth compared to, that's still pretty good for what's been happening out there in the market. So not as up and down like the Bitcoin world, but pretty steady in 2023 for the real estate side. Now, when we dig into the different provinces, there's obviously different stories in different places. But I brought up a couple stats, and I was quite surprised to see that, Nova Scotia was up 14% in their average home price. So like an average home in Nova Scotia is and that's where we are, right? So I thought that was interesting. Up to 413,000 average home price. Whereas Ontario, pretty consistent, 853,000, up 5%. They're right in that, realm. BC, you're looking at up 6.5, average home price 965. Some of the maritime provinces, though, like Prince Edward Island, they had a negative 12% last year. So again, it's not all the same, although the average is around that 5%. Alberta looking at 6% with an average home price of 458. We are seeing lots of people go coast to coast looking for their real estate, right? You're seeing, a little bit of better pricing in the Maritimes and then out west as well. So that's kind of how we wrapped up the year. Now, what's ahead for 2024? A lot of people are saying, right, those interest rates are going to dictate what happens. A lot of people are waiting for that interest rate to fall before they jump back into purchasing. So we are going to see, I think that, with time, we're going to see an increase, an uptick in selling some more houses on the market. A lot of people are saying, though, that we're not going to see a big increase in pricing. And that's just because we're going to have more demand in the market, right? We're going to see, hopefully, more come out. And you're going to see a lot of people, because of the interest rates up and those renewals coming up, which we've been talking about, right? Those renewals are going to happen for a lot of people this year. And you may see a lot of things come to the market because of that reason, right? So you've got investors and the average person that just can't hold on to that house with the interest rate at 7 when they locked in at 2 5 years ago. And you're going to see those hit the market. So people are predicting out there that we're going to see an increase of sellers. We're going to see more buyers jumping in because they're going to have those if interest rates go down. But we're not going to see a huge expansion in price like we've seen in prior years. Maybe just around that 5%, which I'm cool with, like a solid 5% year over year. I'd be a happy camper. So
Yeah, considering appreciation is only one of the jobs that you do with real estate, consistent 5%. Jump at that after the last couple of years of up and down. Yeah, I mean, it's going to be real interesting in real estate. You know, if people lose their homes, oh, great, they're not gonna be able to afford it. They're gonna have fire sales, but there's so much demand. There's so many people that are on the sidelines that kind of almost stopped or did stop looking because of the high interest rates. And if rates drop, how many of those people are going to come back on the market? And there's just, we've talked about it in other podcasts. We just have too many people for the amount of homes in Canada. So, we have a supply and demand issue. So a slight increase in supply, I don't think is gonna overtake the massive uptick or massive increase in demand or what we have for demand now before we even see an increase with the lowering of the interest rates. So who knows? It's gonna be an interesting 2024. So if we jump on to economic news, so we've been following the GDP, and are we in a technical recession? Are we not in a recession? And we keep two periods or 2 quarters of negative growth is a recession. So we saw negative growth in the third quarter in Canada. GDP was down 1.1%, and then November we said we were down, and then they changed their mind in December and said no, November was up a little bit. So now we get the year-end numbers, and they said GDP likely grew 0.3% in December. So likely grew 0.3%. Now, why do I say likely? Well, remember I said they changed the stats for November. So when they released the GDP right away, right at sort of a couple weeks after the end of the quarter or end of the month, they call it a flash report. So that's them basically using best guesstimate on where GDP actually was. So they look at, limited data and say, based upon that, we think it grew 0.3% in this case. But in another month or so, they'll have all the data and they'll come back and they'll correct that up or down. So if it holds at 0.3%, that means the fourth quarter, we saw a GDP increase of 1.2. So we get a small little increase. So that would be negative in third quarter, slight increase in fourth quarter. Technically, not a recession, which would be 2 negative quarters. We'll see how they do it. And again, I think that one of the bigger issues is the reason our GDP is staying flat or increasing slightly. If you dig into the numbers, it's not a good situation for a country to be in, because our productivity is actually shrinking. So if you look at the OECD numbers and where Canada ranks in productivity, our productivity is shrinking big time. We are like 42% as productive as Ireland. And the gap between Canada and the US in the last 20 years has increased significantly. So Canada is not getting more productive. So what does that mean? Well, GDP is how much you produce per person. So we're getting less productive. We're not getting more productive like all the other countries, but we've just brought so many new Canadians in that's maintaining or slightly increasing our GDP, not because we're getting more efficient or more productive like the rest of the countries. We're getting less efficient or keeping the same, but we're bringing in more people. So that kind of artificially increases our GDP to make it look better than it is. So if we didn't have that population increase that we've had in the last couple of years, we would definitely have a negative GDP. So, it'll be interesting long-term to see how this all shakes out. But I think the productivity is a real issue in Canada. And I don't understand how we're not more productive. Trudeau has increased the federal service workers by 40% since he took office. So you would think with all those extra federal government workers, Canada would be the most efficient country in the world, but somehow that hasn't materialized yet. So that's what's going on in the economic update. So slight increase in GDP. Technically, we're not in a recession, subject to review in another month when the final numbers come out.
Love those technicalities. Just love it when you actually dig into those numbers and see what actually is happening under there.
Well, it's funny because it reminds me when I was doing my MBA, my favorite accounting course I took, I had this prof who was who was actually a professor, or actually one of the profs I like because he was actually in private practice for years. He was VP, I think, of Arthur Ashe, one of the big accounting firms, and back in the day. And he's like, "Oh no! Like the real world is the CEO would come in and go, 'No, we made 10 million,' and it's like, 'Well, no, sir, you lost 2 million.' He goes, 'No, we made 10 million. Make it happen.'" And he goes, "Our job was to go back and see how we could defer expenses or incorporate this money that's coming next month, this month." Like he goes, and that's what it kind of reminds me of with this economic data. It's like, oh, we have a slight recession. No, 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 we don't. Let's go back and review those numbers. I think you meant to say we have a slight growth, so we're not in recession. Oh yeah, yeah. Let's go back and review those. So I'm not saying that's what's going on, but that's what it feels like.
Yeah, no, for sure. Well, I want to share some more positive news on the
Yay.
get into the industry side of things. So we started seeing the dividend announcements come out this past month. So Sun Life was the first to announce what the dividend will be for 2024 into 2025, and they're holding at that 6.25. Which is great news, right? We've seen a lot of ups and downs in the last year. So to be able to hold strong and keep going at that same dividend is great. And now it's done, right? Declared, done. Don't have to think about it again until 2025 at this point. So very exciting to hear that news. We'll hear the others come out over the next few months. So I think April, usually get an announcement April, May, June as well. So we'll hear about what the other insurance companies are doing. But historically speaking, they usually do follow suit. So you're either going to see them hold steady. They usually don't. The four we work with, anyways, are usually pretty similar when they make their announcements. You're either going to see a little increase or hold the same.
Yeah, I wouldn't be surprised if we saw a slight increase in the others. I think they all have slightly different portfolios backing them, and I'm not surprised Sun held firm. I wouldn't be surprised to see slight increases, but time will tell. But it goes back to Christina. You and I do this all the time, where we have annual reviews with clients, and it's like, yeah, it's working out exactly as we planned, or maybe a little bit better because dividends went up the last couple of years. Boring but effective. Like, we don't have the massive up and downs because you get your real estate portfolio go up and down, your Bitcoin going up and down, your stock market going up and down, and your whole life's just chugging along, just consistent, perfect, that strong base of your financial plan. So I love that. More industry news. This was interesting. Manulife has decided to get back into the annuity market at the end of 2023. They did this. So the annuity market in the United States has just been exploding. So going back to 2018, there was about $100 million worth of annuities, and now it's at 350 million. So it's more than tripled since 2018. And the reason why annuities are so much or more popular now than they were is because interest rates are up. So now when you get an annuity is basically you trade a bag of money to typically an insurance company, and they give you a pension for life. That's the easiest way to describe it, right? Well, if you don't have a pension and you've got $500,000 and you go, listen, I'm tired of this stock market stuff. Why don't I give you my bag of money and you give me a pension for life? And that's what an annuity is, an income for life. So now, like you look at a 70-year-old male right now, if they had $1 million, an annuity is going to pay them somewhere between 78 and 80 grand a year for the rest of their lives. Doesn't matter if the stock market drops, doesn't matter if interest rates go up or down, taxes, and most of that 78 to 80 grand would be, probably 75% of it would be tax free too. It's considered a return on capital. So it's tax efficient money. But again, we're seeing those rates go up because of the higher interest rates. So, interesting to see in Canada, see if we'll see any significant changes in more people buying annuities, but in the States, it's very popular these days. And then to talk about our podcast, I want to quickly review what we had this past month, because we had some really cool podcasts this past month.
Now, before we jump into that, though, we didn't do our news. So our control and compound news. We did industry, but we didn't talk about what we're doing, which is exciting too, right? We got a lot of stuff on the go. I want to mention.
We're on the ball today, Christina.
So for control and compound news, what have we been up to? Well, Darren went out to Toronto just a couple weeks ago now to Danielle Chaison's event, the Strategic Entrepreneur. That was great. You had a great turnout there, right? Yeah. Darren enjoyed that.
Yeah, it was a big crowd, and it was amazing. Group of speakers that spoke. In addition to me, I was super impressed with just the people in that room. Was pretty cool. You want to be around like-minded people. It was a neat time.
Yeah, great networking event too. I think they had a lot of, I love how she incorporates that into her events because it's great just chatting with people as well. For other events we have coming up, we're super excited to be in Calgary, February 15th to 18th for Ken Dunn's Real Estate Investor Summit. So if you haven't got your ticket, we do have a link below in the show notes. So if you're in that area, definitely make sure that you come out and see us. He always has a great lineup of speakers, including Darren himself. So you're not going to want to miss that one. As well, another big event that we signed up for, or that we're signed on for now as sponsor and speaker, is the multifamily conference in April. So that's May.
May.
It's in May. My bad. Spring. You know what I mean? It's coming. I just can't see it past the snow right now. But yeah, so May we're gonna be at the multifamily conference. If you haven't started seeing that, I know that Seth has a lot of marketing out there, and he's got updates. He's announcing speakers, and it sounds like it's going to be a very exciting time. So if you're interested, that's in Toronto in May. If you're interested, definitely look into that as well. We're going to be there with all of you wonderful people too. All right, now you can jump into the podcast, Darren.
Thank you. All right. So last month we had Ken Dunn on from the Real Estate Investor Summit, and Ken is an absolute pro at raising money, and he shared some insights and some of the resorts and stuff that he's doing. That was a really cool one. We did a podcast on does the perfect investment exist, and what would it look like? And that was a real interesting concept. We're kind of do a little series on comparing different investments to the ideal investment. We had we had at least one on business owners, and we're trying to focus. We've got a lot of requests for more podcasts on business owners. So we did one on minimizing the tax on your passive income. So business owners that have too much passive income, well, first of all, they get hammered in tax, and then they have this extra tax once they get over $50,000 of passive income. So we did a podcast on that, how to minimize that. We had Simon Yan on, the condo flipping king in Toronto. He's also going to be speaking in Calgary at Ken Dunn's event. And then we did a Nelson Nash one, expanding your infinite banking system. Literally, we talk about Nelson's book where he talks about how do you put all of your money into this and does it make sense? And we kind of broke that down a little bit. So that was an interesting one. So great podcast last month, and we got some awesome ones coming up this month. Christina, what do we got?
Yeah, I'm super excited for February. We've got some great podcasts coming out. So our first one next week, you're not going to want to miss this one, is the dirty little secrets of RRSPs. So with RSP season among us and everybody talking about it, well, we've got a great podcast that you're not going to want to miss. So the dirty little secrets of RRSPs. Another one, business owners asked us for is a podcast on the capital dividend account and how that works, especially, specifically how it works with life insurance death benefits. So, when a business owner passes away, we always talk about that life insurance death benefit being tax-free, flowing through the CDA. Well, this is digging into it, right? So we're gonna go through that. Another one is whole life as an asset class. So this one's super cool. A lot of us, or a lot of individuals out there, have fixed income in their investment portfolios. This is looking at whole life as replacing that, making it that much better. So you're going to want to check that one out. And then we continue our Bitcoin series, which you're not going to want to miss because there's a lot of big things happening in 2024, as Darren has explained to me. So you're not going to want to miss those updates and hear what's going on with Bitcoin too.
Yeah, I'm excited about those February podcasts. I encourage all of you business owners and real estate investors, you might want to listen to the dirty little secrets of an RSP before you make a massive contribution for the end of February. And business owners, you got to check out that the capital dividend one. But what I really liked about the whole life as an asset class, we get a lot of people asking, doing this infinite banking, going, what if I don't take a loan against one of my policies? And we address that question in the podcast. So again, all this stuff we're providing, this information we're providing, a lot of it or most of it is based upon feedback we're getting from listeners and from clients saying, hey, can you do one on this? Can you do one on that? So keep those ideas coming. We listen to each and every one of them when we try to get to them. So that's the update for the month of February. Thanks for watching. Thanks for listening. We'll see you next time.
Hey, it's Darren Mitchell. I am super excited to be presenting at the Real Estate Investor Summit in Calgary, February 15th to 18th. Amazing line of speakers. We've got Michelle Romano from Dragon's Den. We've got Investor Mel and Dave. We got Ken Dunn, ultimate fundraiser guy. Simon, the condo king. We're going to show you how to get started on your real estate journey or experienced people. We're going to show you vetted deals, and we're going to show you how to invest passively. Buy your tickets for the Real Estate Investor Summit now.